Hello and welcome to Bricks Videos. This is a channel where we answer all your questions related to property buying. Today's video is on the tax exemption on capital gains earned from a residential property sale. When you sell a real estate property or any non-inventory asset of value for more than what you have purchased it for, you will have to pay a fee to the government. This fee is termed as capital gains tax. But there are certain tax exemptions that can help a taxpayer evade from paying tax on such profits made. Let us have a quick look at the capital gains tax exemption, section 54, and the conditions that need to be met. An individual can utilize the capital gains earned by further reinvesting in purchasing up to 2 residential properties, and up to 2 crore of capital gains amount is exempt as mentioned in the budget for the year 2019 and 20. Under section 54, any long-term capital gain but not short-term capital gain arising to an individual or Hindu undivided family from the sale of a residential property, do not forget, only residential property, shall be exempt provided the conditions are met. Firstly, the seller should purchase a residential house either 1 year before or within 2 years after the date of sale or transfer. In the case of a new under construction house, the construction of new residential house property should be completed within 3 years from the date of sale or transfer of old property. This exemption can be enjoyed by an individual only once in a lifetime. The seller should purchase new residential property in India and not in any other country. Also, if the capital gain amount is greater than the cost of the new residential house property, then the cost of the new house shall be exempt. But if the capital gains earned is less than or equal to the cost of the new residential house property, then the entire gains earned shall be exempt. Also, the exemption can be enjoyed by an individual only if the property sold and the new property is purchased in the same individual's name. In the case of joint buyers and joint sellers, the benefit can be enjoyed equally. To avail the above mentioned benefit, a taxpayer must reinvest the capital gains earned on the specific property type within a specified period. But due to certain unavoidable circumstances, if failed to do so, then the capital gains earned can still be invested in a separate capital gains account under capital gains account scheme. Please watch our related video on capital gains account scheme by clicking on the link in the description box below. As mentioned earlier, tax exemption under section 54 is available only on long-term capital gains. Finally, the exemption under section 54 that a seller avails by reinvesting in a new property can only sustain if all the above mentioned conditions are met, failing to which the benefits will be reversed and the seller will have to pay the capital gains tax that had been exempted. This brings us to the end of this video. We hope we have answered your queries relating to this video. If you have any questions, please leave them in the comment section below and we respond to every comment we receive.